This meeting is being recorded.
Welcome to all of you who are attending today. We're just going to wait 1 more minute to make sure we have everyone in the room and start. All right. Welcome, bonjour à tous. Very excited for this workshop today. Before we start, we would like to take a moment to acknowledge and recognize the indigenous peoples of all the lands that we are on today and which we each call home. We at techNL would like to acknowledge with respect the diverse histories and cultures of the Beothuk, Mi'kmaq, Innu, and Inuit of Newfoundland and Labrador. We are very pleased to host this webinar today to support our members in being ready for 2023. You will hear from Economist Glen Hodgson on the outlook for 2023 for about 30 minutes, and it will be followed by a panel of about 20 to 30 minutes with local tech leaders on their experience and perspective on what's to come. So let's dive in. I would like to introduce you to Economist Glen Hodgson. Glen has 40 years of experience in global and Canadian macroeconomics, international finance, fiscal policy, and other big picture topics. Glen's career spanned the Conference Board of Canada, where he was a senior vice president and chief economist for over a decade. Export Developments Canada, the Canadian Department of Finance, and the International Monetary Fund in Washington, D.C. His current affiliation include a senior fellow at the CDO Institute, chief economist with International Financial Consulting, fellow with the Public Policy Forum, and expert advisor of the Canadian Climate Institute. He's the chairman of the Rizkalla Institute, a think tank focused on advancing corporate social purpose, and a past president and board member of the Ottawa Economics Association. Glen is also a recipient of the Ottawa Economics Association Award for distinction, recognizing his contribution to Canadian economist analysis and policies. And recent works include a research study on climate risk management by Canadian banks, the corporation, and on the Canadian green bond markets. A UN project to develop the first integrated national financial framework for Nigeria. The legislative review of EDC and various articles on topic like the impact of COVID pandemic on the COVID pandemic and the economics of climate change and sustainable finances. Then has a co-author 2 books and written about 450 reports. That's a lot of reports. And I'm sure we're going to hear a lot of insight from those reports as well. He has delivered many presentations to the audience of all types and size and done numerous media interviews via print, TV, radio, and social media. He's a graduate of McGill University and the University of Manitoba. Glen, we are very excited to be here. Thank you for joining us and sharing some insight on what's to come in 2023. We look forward to hear from you. So let's dive in.
Merci beaucoup, Florian. Thanks very much. Great to be with you today in sunny, warm Newfoundland. It's the same in Ottawa. It's gray and about 3 degrees today. So it is December. I'm just going to put my slides up because economists always have their slideshow.
We also have a sun, but it's just behind clouds, and it's going to come later, hopefully.
There you go. Okay, so I've got about 30 minutes, and obviously the topic of the day is inflation and also the risk of recession. So I've entitled this Getting Inflation Back Under Control, and we'll talk about the recession risk as we go through it. Let's start with the complicated picture. If we go back to January, it actually looked like a pretty good year for 2022. The expectation was that global growth and growth in most parts of the world would be pretty strong. But then inflation took off, and arguably the most important event was Russia's invasion of Ukraine, because that really created massive turmoil in financial markets, in energy markets. It really shocked expectations. So that threw the recovery off course, and now we have to think about all the different factors that are affecting the outlook. The state of global supply chains, what's happening in oil and gas markets and with prices. Obviously, we're in a rising interest rate environment. I'll talk about that. Housing markets are maybe heading the other direction in terms of a price readjustment. And then there's some structural factors, aging demographics and climate change. All of that really affects the economic outlook. I like to separate between kind of the immediate picture, the business cycle, and the structural factors. And I'll try and do that through the presentation. I'm not going to spend a lot of time in this. It's kind of a busy slide, but it shows you how wild the global economy has been the last 3 years and going into 2023. You can all pick out your favorite region. You can see that the growth rates and contraction are quite different. But everybody shrank in 2020 with the pandemic shutdown. Fairly strong recovery last year across all the regions. More muted growth now expected this year. If I'd shown you this back in January, you would have added another 1.5 to 2 percentage points by region. And then slower growth yet next year with a strong recession risk in Europe and North America in particular. And of course, emerging Asia is still the growth leader in the world. I'm then just going to turn very quickly to China, because I think more and more we have to think about China as the other dominant force in the global economy beside the United States and Europe.
Sorry, your slides aren't advancing. Your slides aren't advancing. We're only seeing one slide there.
They're advancing for me.
I think if you put it in presentation mode, Glenn.
Okay. Sorry. Is that in presentation mode now?
No.
Darn. So we're back to the, shall we go back to the first slide?
I think you're okay to carry on from there.
Am I there now?
You're on slide 2.
How's that?
That's slide 3.
Good. Okay. So I described the slide. You can see that big drop 2022, strong recovery last year, more muted growth this year, and recession risk for next year, most likely in Eurozone and North America. I wanted to talk very briefly about China, simply because China's a source of fascination for me. I'm not a China expert, but I certainly am a China watcher. And there's 2 or 3 messages from this slide. First of all, China's years of spectacular growth are slowly coming to an end. You can see that how growth has dropped over the 2010s. Right now, China's facing kind of its slowest growth rate in really decades, along with the pullback in 2020, in part due to the COVID shutdown in China, but also due to, I think, a shifted attitude towards innovation and entrepreneurs in China, plus the fact that China is very close to having its maximum population. It's going to start shrinking in terms of population within the next 3 or 4 years. So you put all that together, attitude shift within the leadership in China. Xi Jinping is not as committed to economic reform as his predecessors were. And it means that China is entering a new phase where spectacular growth, I think, has come to an end. It's still a very important market, and it's still going to pass the United States in terms of the share of the global economy within the next 5 years. But it's not the superpower, the apparent superpower it appeared to be even as little as 5 years ago. But obviously still an important factor. Now, coming closer to home, the United States outlook, strong recovery last year, initial strong expectation of growth this year. But the US has been hit hard by the spike in energy prices and by rising interest rates, which are clearly important as a way to contain inflation. And that has really dragged down inflation expectations. And there's a very elevated risk of the United States having a recession, either in this quarter or into the first part of 2023, although the job impact may not be as strong as the impact on employment. So even if the US falls into recession, I'd say it's about 70% likely that there'll be a recession, meaning 2 consecutive quarters of contraction. You may not see a huge rise in unemployment. You may actually see some of the steam taken out of labor markets. And I think we have an expectation that by the end of 2023, inflation will be lower. The Fed's clearly signaled that they've got two feet on the brakes right now, so they're going to slow the US economy down, and then there'll be a recovery period afterwards. So here's the growth outlook for the United States. I've taken this from kind of a consensus looking at the US Fed and the IMF. Forecast growth of only about 1.5% this year. So the last couple months have been very slow, although remarkably positive news still in the labor markets. And then the consensus is for growth of 1% next year. So a positive growth story for the year as a whole, but it's very possible to have 2 quarters of contraction in a growth year. Now, whether the contraction is mild, strong, whether there's no contraction, if you look at social media every day, you can see a different opinion from an economist. There's a very good economist named Mark Zandi at Moody's put out a commentary yesterday where he argued that it's not guaranteed at all that the US will fall into recession, but that is kind of the consensus view amongst most economic forecasters. I mentioned that the impact on output will probably be stronger, contraction will be stronger than the impact on employment. And here's why. The US is now in a position where the structural unemployment rate is below 4%, and there are more job openings than there are people to occupy the jobs, about 2 to 1 in fact. So the most likely impact in the United States is the rate of job openings will slow. People will continue to seek employment. So maybe there'll be a small uptick in the unemployment rate, but it'll be nothing like what happened in 2020 when US unemployment went from 4% to 10% almost overnight. It might go from 3.6% today to maybe 6 or 6.5 worst case if there's a recession. So a lot of cards are in the air right now. Slowing is obviously happening in the US economy. It's not guaranteed that it falls into recession, but it's probably better than 50-50 likely. Now switch to Canada. So we're clearly impacted by what's happening globally and in the United States, and the impact of rising rates is also slowing the Canadian economy. We had a good first half of the year, but the evidence into the second half is that month after month, you're seeing a little bit less vibrancy in the economy. Recession is a possibility as well within Canada. One thing I wanted to point to, it's important for Newfoundlanders to hear this, is that the impact of higher energy prices and commodity prices is largely neutral for GDP across the country. It depends on whether you're a net producer or a net consumer of energy and commodities. Newfoundland is obviously a net producer of both energy and lots of minerals. So high prices tend to be good for the Newfoundland economy. They tend to be not so good for Quebec or for Ontario. So it's a very different impact across the country. But I do expect inflation to moderate, and I'll do a deeper dive into the numbers for you now. Oh, Marlene asked me to talk about business implications all the way through the presentation. So Marlene, to address that, I thought I would put sort of my findings right up front, and then we'll see whether I actually speak to these points as I go through the presentation. And I identified sort of 5 broad implications. First, clearly we're hitting into our higher interest rate environment. And so the need for careful debt management has become much more acute than it was even 8 months ago or six months ago. Now, frankly, rates are going back to kind of a more normal state right now. What we lived through 2020 and 2021 was not normal. Inflation started to rebound, rates are still very low. Arguably, the Bank of Canada was slow to raise rates, but rates are clearly rising right now. The bank's next increase will either be 25 to 50 basis points. That may actually be enough to keep inflation under control in Canada, although there might be one more increase required. But overall, all of us, personally, as businesses, as provincial economies, have to think about debt management much more seriously now, because we're going to be paying a lot more for accessing debt markets. Secondly, clearly slower growth and recession is a risk that's ahead. This is a business risk, but it's also an opportunity to think about where you sit within your market segment. And is there actually an opportunity to get through this and grow at the expense of your weaker competitors? I mean, that's a fairly standard story from economists in a slowdown period. I mean, the cream does rise to the top. Many firms will survive, a few will fail. So doing an environmental scan in your sectors, is there a chance to actually grow within your segment? Thirdly, much tighter labor markets going forward. I showed you the US numbers. This is a structural reality. This is not transitional. This is going to be a feature in our economy for the next multiple decades as we really due to the impact of aging demographics. Point number 4, the employment growth is going to come from new Canadians and underrepresented groups. So if you're an employer right now looking at the available talent, I would not say just don't be afraid to hire new Canadians. I think you should actually have an activist strategy to think about embracing new talent that's available in our workforce, whether people arriving in Canada or groups that have not been fully represented with our workforce. And lastly, climate change is real. The energy transition is underway. The GM announced this morning that they're creating a new production line for electric commercial vehicles in Canada. That's a good opportunity for Southern Ontario, but it really signifies the kind of transition we're now going through, which is obviously going to create huge challenges for sectors, for provinces, for firms, for individuals, but also for nimble companies that'll create opportunities. Now, I'm putting that out now, and then I'll hopefully mention those points as I go through the balance of the presentation. So the last 2 years, we've seen really extraordinary fiscal policy. We've seen the federal government, provincial governments pumping a huge amount of liquidity, money, into our economy to kind of deaden the impact of the pandemic, including support for business. And one of the striking results is that the rate of business insolvencies has actually dropped over the last couple of years compared to what it was before. Now, maybe that suggests we put too much money into the market. But of course, if you were sitting in downtown Ottawa in March and April of 2020, you had no idea how much support was required because you didn't know how deep the economy was going to dive. But it's interesting looking backwards, the support was very generous. And that's why we have to find a way to keep kind of bringing our fiscal balances back in order to ensure that's going to be affordable over the long term. Obviously, there's been a big jump in federal debt. Provincial debt was already high for many provinces, including Newfoundland and Labrador. Good news at the federal level, the debt ratio is projected to drop this year and into future years. In fact, they're on a track to have their debt ratio fall to something in the mid to low 40s within the next 5 years. And that's a good thing. I would probably argue for faster debt reduction because it frees up resources for other things, but at least we're on a downward pathway federally in terms of managing our public debt. Switching now to monetary policy, and this is real. It's in the newspaper every day what the Bank of Canada is thinking, what the bank's doing. The bank was arguably a little bit late increasing rates. Inflation was taking off in the second half of 2021, and the bank kept its foot on the gas through most of that year and into this year, before recognizing that the inflationary forces were not simply short-term transitional. There were bigger structural forces at play. Now, the bank's now fully committed to getting inflation back under control. I call it putting the genie back in the bottle. Very hard to do. This slide shows you what's happening right now across what's called the yield curve, which is the comparison of interest rates across the whole spectrum of bonds in the bond market, from 30-day instruments to 5-year to 10-year to long, which can be 30 years or longer. And the kind of faint red line at the top is the one I want you to focus on. That's what we're expecting by the end of December, where at the short end rates will rise to 4%. And then there's now what's called an inverted yield curve, which is usually a sign of recession, where the yield on other bond issues is actually lower than short-term money. They're reflecting kind of market expectations. The short term is really the Bank of Canada putting their foot on the brake. And that's why the inversion's happening. Now, every yield curve does not turn into a recession, but most recessions do have an inverted yield curve, and that's what we're facing right now. And that's part of the reason why economists, across the world are concerned with recession, how deep it's going to be, and also how much pressure the Bank of Canada or other central banks will put on their interest rates. The line below that, the kind of light blue line, that's 2019. That's what a normal yield curve looks like. In a world of 2% inflation, your yield at the short end should be a little bit beyond 2%, like 2.10, 2.25 for 90-day instruments. And then a 10-year bond should be actually giving you a higher yield than 3.5%. Normal would be more like 5 or 6% historically. So that's what we looked like before the pandemic. The yellow line at the very bottom shows you what the Bank of Canada did during the pandemic period, which is to flood the economy with cash, buy all the bonds being issued by the feds, most of the provincial bonds, corporate bonds, to drive down long-term interest rates. And arguably it succeeded. That's why our economy bounced back so quickly towards the second half of 2020. And then the green line in between just shows you kind of the adjustment period last year. But I guess the most striking story is the top red line, which is an inverted yield curve, which is a sign of recession to come. Now, good news, inflation is slowing. And I'm taking apart the key factors here just to give you a sense of where we are. So I look at both supply side sort of cost push pressures and demand side pressures, which the Bank of Canada can address directly through monetary policy. On the cost push side or supply side, global supply chains are clearly healing, and oil prices have dropped the last month. They're actually down quite a bit, but the energy markets are still in turmoil. Russia can still be a huge spoiler in global energy markets. So there's still a lot of turmoil and churn. On the demand side pressures, which are really strong employment growth, strong wage growth, the Bank of Canada is trying to address that through higher interest rates. And that's really a form of tough love. That's a hard way to get inflation under control. Unfortunately, there is no other sort of silver bullet or magic solution. We tried wage and price controls back in the 1970s, and they really didn't work, nor they were really anywhere around the world. So the world resorts to tighter monetary policy as a way to bring inflation back under control. And the other factor that can help sort of control domestic demand is smaller fiscal deficits. So governments getting their act together in terms of fiscal balances, or even moving into surplus. Alberta announced last week that it's going to have a $13 billion surplus for this year, thanks to strong royalty revenues. And then the next day, the government decided to give most of that back in terms of inflation adjustment. So that's kind of paying you in one pocket and taking the money back in the other way around. Contradictory forces within fiscal policy. What we need to watch are the inflation expectations. So what's happening with wage increases? Are people still aspiring to earn 4, 6, 8% more? Or do they appreciate that we're heading back towards a world where 2% inflation will be the norm within a few years? And then specific housing prices like food, housing, and energy. Those are the key price drivers to drop. Now, I mentioned that global supply chains have been healing. They've been healing for most of the last year. So you can see that inflationary pressures started easing even middle of last year, and they kept dropping. Container prices, I saw something yesterday, that being paid in China are down 40%, which both indicates how China is going through a rough patch in their economy, but it also means that there is healing going on very quickly in terms of prices within global supply chains. What about inflation going forward? Well, StatsCan tells us that inflation actually peaked back late spring into the summer and has dropped about a percentage point on a 12-month basis. So that's a really good sign. More striking for me is what's happening in the near term. And so I like to look at the three-month rate of inflation annualized to see where inflation is going. I mean, there isn't really a good forecast for inflation forecast tool, but this is a good indicator of where we are right now. And in fact, current inflation has actually dropped below 4%. And it's back in probably August or September. So we're clearly heading the right direction. Bank of Canada's monetary policy is yet to fully kick in, but it clearly is driving us back towards a world of lower inflation. There's going to be bumps along the way. As I mentioned, inflation expectations have to be watched very carefully in the kind of wage settlements that are emerging. But I brought it all together by giving you kind of my view on what year-end inflation is going to look like for the next 3 years based on the annual rate. So that's a backward-looking 12-month rate. I think by the end of this year, inflation will be down to about 6% annualized. That means it'll be well below 4%, more like 3 to maybe 3.5% on a 3-month basis. End of next year, I think inflation will get well below 4% to something between 3 and 3.5%. The Bank of Canada said in their most recent statement, they want to get it back to 3% by the end of 2023 and 2% in 2024. I'm not sure we're going to get all the way there. I think there will be some bumps along the way. We have to anticipate those. But lower inflation is clearly in the cards. And that's a few generally shared across the economics profession. Turning just quickly now to the labor market. First point I wanted to make is that the rebound from the shutdown in 2020 was actually fairly quick. You can see that by October of last year, employment was back in retail, trade, and information, culture, and recreation to where it was before the shutdown in March of 2020. That's a good sign. The lacking sector is still accommodation and food services. People are traveling again, people are dining out again, but there's still a little bit of trepidation in the market. There's a little bit of concern about COVID, about traveling risk. So we're not all the way back there. But job growth has been really robust. And this tells you the story going back over 5 years. You can see the drop during the COVID period, how quick the recovery was. And then by middle of this year, we were actually at higher levels of employment that we were going into the shutdown. And in the last report from StatsCan, that's the little curl to the line there. You can see that employment actually rose in October, despite the fact that output growth was slowing. We had an increase to employment, which really points, I think, to the tightness of labor markets in Canada. Another way of looking at that is looking at the unemployment rate. You can see that it peaked at over 13% during the shutdown, but then we've had a really steep drop, very rapid healing, quite substantive healing in our labor force over the period. Unemployment rates have ticked up just a little bit recently. Again, if we're heading towards either very, very slow growth into next year or even a recession, you'll see unemployment rise in Canada, probably from the range of 6% to about 7% would be kind of my best guess. But I don't think beyond that, I don't think the likelihood of this being a kind of a deep, sustained recession is very great. So there'll be a bit of pain felt in terms of jobs, but it won't be really acute. I just want to mention very briefly housing markets. We saw, frankly, really crazy behavior during the pandemic shutdown, the subsequent period when demand for housing was way too strong, prices were a bit up in most markets. And of course, mortgage debt has been on the rise. The Bank of Canada is now watching this very carefully because they're worried about people, for example, in floating rate mortgages who are now getting locked in at a higher rate, whether they're actually be able to carry that debt. This is not, debt service is not going to be a challenge across the entire market, but though people who are exposed to highly leveraged property purchases are going to be exposed, and the bank's going to be very mindful of that going forward. Overall, though, if I look at Canada as a whole, I ended up with a story where growth has slowed this year to around 2.5%. That's the view, having looked at the Bank of Canada, Finance Canada, the IMF, the various guys on Bay Street, what their forecast is. Consensus is that growth is going to drop to around 1% in Canada, very similar to the United States in 2023. And yes, there is a recession risk, which is probably 50-50, maybe a little bit higher than that. But then there'll be a fairly good rebound into 2024 as interest rates peak, ideally begin to turn downward again towards the end of 2023 if inflation is brought under control. And we can create kind of more normal conditions going forward for a sustainable growth within our national economy. Now, I'm speaking to a group in Newfoundland and Labrador today, so I thought I should really just tip my hat towards the provincial outlook. Here are the numbers for last year that StatsCan just published. It takes them that long to actually take the national accounts, break them down to provincial accounts, and come up with an estimate for provincial GDP growth. And you can see that there is quite a varied story across the country. You see some real highs, like PI growing at almost 8%, most of Atlantic Canada growing very strongly. Central Canada, okay growth. Western Canada not as strong except for BC. Alberta's 4.8% was actually below what would have normally been expected with high oil prices. I actually had a piece in the Globe and Mail last week talking about this, how the boom is a bit of a facade in Alberta. It's a bit of a fiction. What's happening is oil-based firms in Alberta are actually giving the money back to their shareholders through dividends and share buybacks, not necessarily investing in new capacity going forward. So I'm curious as to whether this is a bit of a pivot point in Alberta's production. And of course, Newfoundland there, with growth of barely above 1%, reflecting the fact that output within the energy sector is now tapering, it's now declining. New fields will come on stream, but there's overall production in the oil sector is dropping now. And that is clearly having an impact on the provincial growth potential and also on provincial revenues. There was one case that was even worse. So Saskatchewan actually contracted in 2021 by nearly 1%. Again, reflecting the mix of factors in the province. Now, I don't do a Newfoundland and Labrador forecast. I kind of drop in, drop out. So I went and looked amongst the Bay Street banks, and I found a good forecast from my friends at TD Economics, where I know the team quite well. And here's their view on what's going to happen in Newfoundland over the next 3 years. They see real growth barely above zero this year, so pushing towards only 0.5%. A little bit stronger next year, reflecting the fact that there is a new oil field coming on stream offshore, and also investment in minerals in Labrador in particular. And then a little bit stronger the year after that. But employment stronger this year than the subsequent 2 years, and because of ongoing concern about the unemployment rate. I also looked at the provincial public finances, and of course, Newfoundland has a large public debt. So debt management, the story I told about debt management for firms, I think applies equally for the provincial economy. Having a serious plan to limit fiscal deficits and find ways to manage the debt effectively is going to become very important for ongoing success in the provincial economy. Two other sort of structural thoughts to conclude the presentation, and I think I'm more or less on time here to wrap this up by about 5 after. Okay, medium outlook. The message I wanted to leave you is that aging demographics in most industrial countries means slower economic growth, and that's what really the pathway ahead lies. And the numbers I put up here show you kind of what the estimate for what economists call potential is, or long-term trend growth, what can be sustained with low inflation. In the US, trend growth has dropped from a world of 3% a decade ago to around 2%. So I've given you the short-term US outlook that goes up and down year by year, but 2% is the rate at which the US economy can grow without accelerating inflation. And that really reflects the underlying demographic factors. In Canada, it's a little bit lower, 1.7%. In Europe, the EU in particular, it's even lower at 1.5%. Japan, it's under 1%. Japan is a rapidly aging population. Japan is actually losing about 1 million people a year from its population base. It has been for nearly a decade now. So it's become a really slow growth destination. And to bookend my comments on China earlier, China is now looking at potential of 4% or less. So the days of double-digit growth are clearly behind China. And I think less is likely because China seems to be working so hard to discourage innovation, discourage entrepreneurship, maybe sort of rebalance. The Chinese Communist Party is clearly going through a rebalancing where they're putting more weight on state actors and less on the private sector. So slower growth in most major places around the world. And for Canada, immigration is the driver to employment. It'll drive Canada's population increase. It'll drive job growth going forward. And you can see this chart, which is from an RBC presentation, shows you we're right at the point where the born in Canada population, the so-called natural growth rate, is heading towards zero by 2030. So we're very much reliant upon immigration to create vibrancy within our economies. And the message for any provincial government, provincial economy is make sure you're getting your fair share of immigrants. You should have an activist immigration policy and strategy to ensure that the holes and opportunities are being addressed within the Newfoundland economy. And then lastly, I just wanted to close with a few thoughts on climate change. As you heard in the intro, I've kind of transitioned from doing the economic forecast to thinking about various aspects of the green economy. So I wrote a couple papers for C.D. Howe on the green barn market. I did another one on bank climate risk management, and I've got another one coming basically on the macroeconomic context for climate change. And climate change is going to weigh on the economy in two ways. There's obviously the physical risk of climate change itself, extreme weather, which you felt with the hurricane effects a month ago, floods, forest fires. We're seeing more extreme weather across Canada. And I think there's a fairly clear link being established now by the scientists between climate change and the risk of extreme physical effects on economy, society, but also the transformation to cut greenhouse gas emissions. Now, Newfoundland and Labrador is already facing a reduction in production from its offshore fields. On top of that, there is a global force for transformation. I mentioned earlier the fact that GM is now producing EVs in Canada, electric vehicles in Canada. That's a global phenomenon. The International Energy Agency is predicting that global oil demand will plateau either in 2025 in the earliest case, but by sometime in the mid-2030s, because of that transformation, because of the movement towards EVs, all the other changes that are going on. Now, with large change like this, there are obvious risks. to conventional energy, to jobs, to investment, to wealth. But there's also going to be growth opportunities. And this is where I'm going to focus my own research on the impact of cheaper renewables, the kind of scale of investment that's going to be required, and innovation required everywhere. And of course, that speaks directly to the interests of your association and your membership and your businesses. You're innovators. You're there to help people solve problems, to boost their productivity, to find new ways to do business smarter. So I would argue that climate change will offer an opportunity to many firms in the IT sector. Many advanced technology firms are going to find exciting opportunities in a world where we're going through transformation. But it's also going to be a scary, risky world. So to wrap it up again with my opening thoughts, I've talked about rising interest rate environment and the need to manage debt, whether there's an opportunity as well as risk in slower growth. Talked about the structural reality within our labor markets, the fact that the tighter markets are structural, they're not just a transitional thing. The importance of capturing new Canadians in your places of work, and then climate change as an overall factor. And I think I'm more or less ending on track. So thanks very much for your attention. Quite happy to take any questions.
Awesome, great. Thank you, Glenn. Greatly appreciated to hear those insights. I know there are a lot of people in the room who have, possible questions, but also want to hear from a panel of local leaders what they think about what you just shared. And I would also say that, yes, we have a lot of innovators here, and those change in the economy create opportunities. Very excited to see what local tech companies will do with those opportunities. So now we're going to move to the panel section. If you have any questions, don't hesitate to share them in the chat. I will take a look at them and bring them to the group. But we are very lucky to have, as I mentioned, a panel of local leaders. First, Lynn Healey. She's the interim chief executive officer for Sequence Bio, a commercial stage biotechnology company based in Newfoundland and Labrador. The company's platform leverages a Newfoundland and Labrador founder effect to power discovery cohort for novel targets identification across numerous disease indications. Sequence Bio collaborate with the people of Newfoundland and Labrador and partners with leading pharma and biotech to help accelerate the development of new medicines for global unmet medical needs. Lynn is also the director of Newfoundland's Power and a member of Newfoundland's Power and Finance and Audit Committee. She's also a director of the CPA, Newfoundland and Labrador, very busy it seems, the Cancer Care Foundation of Newfoundland and Labrador, and director of the Treasurer for the 2025 Canada Games Host Society. Lynn, welcome to this panel. Emad Rizkalla is the CEO and founder of BlueDrop ISM. Emad started BlueDrop in 1992, and I'm sure I've seen a lot of different trends in the economy. So I'm also keen to hear a little more on what you have seen and what you learned from it and what you can share with the group. And before BlueDrop, graduated from a degree in mechanical engineering from Memorial. The BlueDrop ISM division is recognized as a global innovator in workforce upskilling. It transformed training delivery and credential management for workforces that stretch across many employers. Emad has spoken at many conferences, including a lot of conferences with techNL, and appeared in both national and global media. He has advised governments on how economy will be impacted by the current revolution in the workplace, which is the most profound one in the human history. Emad's view on the workforce of the future, innovation, and corporate culture were referenced in several books and are best accessed in his blog on the Huffington Post. Sorry, I'm also a newcomer with a little bit of an accent. Finally, Larry Short, who will facilitate this panel. Larry Short is a CPA and former vice president with both RBC Dominion Securities and then TD Waterhouse, and left TD in 2008 to establish his own firm called Short Financial. Short Financial now has office in St. John's and Toronto. Larry is also a certified financial planner, a certified investment manager, and a portfolio manager. He's a published author of, in short, Secrets to Make Your Dollars Grow, and in short, Successful Investing During Turbulent Times. I'm sure some insights there as well to share today. In his third book, titled The Last Act. He co-authored with Kimberly Short and was just published by CPA Canada in November. Welcome to the three of you. I'm curious to hear, what's your reaction? Larry, do you want to facilitate the conversation and take it from here?
Yes, we want to make it, bring it back to the local economy, local environment. So I have two questions. First question is to Lynn and Emad. You're not going to get off easily, or maybe you're getting off a little easier because you'll hear what Lynn has to say, but you can't copy. So the first question to Lynn is, what are the three biggest challenges for growth for the tech business in the province? And then from there, what I want to do is talk about how is it that what Glen has shared with us today will affect those three challenges.
Sure. Thanks, Larry, and good afternoon, everyone. It's a pleasure to be here. From my perspective, I would characterize the three biggest challenges right now, largely the first being around just access to capital. And being able to scale the growth that we need to, or to scale the growth we want to achieve. I think what's happened in the global economic environment, particularly in the past year, we've just seen very much a shift in a more of a risk-off appetite. And so deals are still getting done, but what an investor needs to pull the trigger to invest is a much higher bar than it would have been a year and a half ago. So I think that is causing a challenge. Talent is absolutely, I think, very significant. Access to that talent, particularly, very skilled workers in the tech sector. So coders, deep security experts, that technical expertise is key. And I think very much tied into that is the point that Glen touched on around immigration and immigration policies and how we navigate that. I think from my standpoint, I see those as three of the key challenges right now. When I think about some of the things that Glen shared in his presentation, I do, though, notwithstanding those challenges, agree with I agree with a lot of his points, but one of the points that I think was very well taken and placed was the fact that times like these do present opportunities. So we all, I think, can agree on the fact that Newfoundlanders and Labradorians, particularly in the tech sector, have an extraordinary amount of resilience, and our ability to innovate despite whatever circumstances we're presented with, I think, is a key advantage for us. So I think times like these do present opportunities for innovation, opening new markets. We've seen that in our sector as well. We primarily serve pharma and biopharma, and that sector has not been insulated from inflationary pressures, but that's opened up new avenues for us in terms of looking at partnering and collaborating with artificial intelligence companies and et cetera. So I think that is something that we can all focus on. In addition to that, I think it's also a great time to opportunistically look at talent acquisition. It's not really, we want to be cautious, but it's not a time to fully, retrench and retreat. So overall capital management, both from a financial capital and human capital perspective, is critical in this time. And I think as we navigate that, there will be opportunities for us.
Thank you. And Emad, further thoughts there? You're muted.
Sorry, yeah, my computer doesn't want to let me talk. It must be smarter than all of you who have to listen to me talk now. I just want to strongly disagree with Lynn, obviously. No, there's nothing to disagree about. I mean, show of hands, how many people think that talent is a big issue? Of course, it is. And I would say that I would also agree that senior talent, my experience is that for every very senior person, especially in areas like finance, marketing, sales, obviously in some technology areas as well, like architects and so on, the amount of growth that you generate from having someone that's competent and experienced and brings something to a technology company, a technology startup, is profound relative to hiring 10 interns and developing them. I know we have a big focus on that, and I think we have an obligation to do that as a tech community. But in terms of what grows the industry, it's senior people in those areas, and how do you get them, and where do you get them from, and so on. And of course, that closely links to the next point, which is immigration, which is profoundly important to the province on multiple levels, not just for the sector, but immigrants or the kids of immigrants, and specifically, are much more likely to start businesses because they happen to be from that small percentage of the population of the countries they came from that are very big risk takers. They moved across the ocean, and the kids that grow up in that environment are much more likely to view starting a business as less risky. But obviously, we needed to stabilize our demographics because it's a bomb right now in terms of how the population is aging. So we need kids in school, and I think this is the first year for many years. I can't remember the last time. I think it was the data came out recently for maybe 20 years that we've actually had more kids in kindergarten than the previous year. So that's great news for the economy. So we need that. I would love to talk about skills. I mean, because I think at a macro global level, the skills, the pace of change would be very profound. And I think we're losing 85 million jobs in the next 3 years. We're creating 100 million new jobs because of technology. I think 50% of jobs need some kind of upskilling. So that would be my sort of default answer given my hat. But I think healthcare is a big problem in the province. And I think if you're trying to attract people and keep people, they need access to family doctors, and they need access to services. And I think that will be a rate limiting step if we don't address it. In terms of what Glen said, I thought it was excellent, obviously, to put it in context in terms of where the economy is going. Obviously, the shift to green is very important and could be, a negative impact on the province if we're not part of it, because obviously we have a critical oil industry. But I think it actually presents an opportunity, especially with all the hydrogen developments and so on. So what I was struck with is how important all the hydrogen developments, wind power going to hydrogen, et cetera, are going to be to the future of the province.
So we talk about a community of the tech community in the province, and if we really boil it down, as a community, we're about the size of a village. Everybody seems to know each other. Everybody's pretty much aware of what developments are happening here within the province. But if you were looking around the world and said there's a jurisdiction that's doing this better than what we are doing it within the province, is there some place, like when I'm talking about oil, for example, Norway is doing a much better job than Newfoundland is in the oil development and distribution of the wealth that is created. Is there a similar sort of jurisdiction in the world where the province should emulate? And I question Emad there first.
Oh, well, I didn't get a chance to disagree with what Lynn was going to say. No, I mean, well, first of all, I just want to zero in on immigration in terms of places that are doing better. I never use PEI as an example. Forgive me if anybody there is from PEI. I love PEI, but I never use it as an example of what's going. But I think their population grew by 8%. So that just struck me because that, when we talk about Norway or Iceland or Denmark, people tend to kind of think, well, yeah, but they're different. They're countries. They're this, they're that. But PEI is, I was in a presentation in Halifax. I was giving a talk on something, and the person previous to me was showing the immigration numbers for Atlantic Canada. And, we're finally sort of in the race, in the fight on immigration. But PEI actually had larger numbers of immigrants and migration than Newfoundland did. It wasn't like not per capita, just period. So they have 100,000 people. So I think if we look at sort of what's working well there, I mean, first of all, the entire island is behind immigration. The businesses have started hiring immigrants. There seems to be, because we're new to it, there seems to be a mindset of some businesses that, that immigrants, well, let's say English is not very good. That seems to be almost a rate defining issue. Like, I need someone that can lift 400 pounds and they'll never be able to lift 400 pounds. Well, English isn't that. English is just like any other skill. So we tend to be just less experienced with immigrants as a business community. And we tend to really weigh things like language as impermeable, barriers where really they develop. So I think we can really look at PEI as a model for immigration. And I think if we fix the numbers on immigration and we actually start growing at that kind of pace, a lot of problems will get taken care of.
And Lynn, you share that thought, or is there another place in the world that you'd look?
No, I think there'll be a theme here. I do share Emad's thought with PEI. I think they've done a great job, and quite frankly, they have been focused on immigration for a long time and much ahead of us. So I think that is a great example. I actually think if you just kind of look at, your initial question and kind of exclude immigration from the concept for a moment, I actually think Newfoundland and Labrador has done a great job within the tech ecosystem. And I would say in some respects, we're an environment that other jurisdictions can emulate, particularly from the perspective of how, because we are a close-knit village, as you put it, Larry, I think there is an element of support within the ecosystem, and just kind of the whole adage of the rising tide floats all boats, and I think we're very fortunate to exist in that. Certainly there's still areas for improvement and certain policy things we can think about, etc. But I actually think we've done a lot in the past few years that I think we should be quite proud of in terms of just some of the initiatives that have been taken, and certainly room to grow, but I think a lot of good steps.
So back to you, Lynn, with this question then. Institutions such as Memorial University and then the provincial government in general, when I think about the potential for a university to be a major factor in the development of the IT sector. And just as an example, in Dalhousie, for example, there's a professor who is one of the leads for Tesla on battery technology. So you can imagine that the resources of Tesla is coming into that university, and the research is being done around that. Is Memorial University operating as a silo, or is it actually, are you seeing a lot of assistance from the university itself? And could there be a more directed means of obtaining resources from the university to help within the tech sector?
I think that is a good question, Larry. I think Memorial has done a great job. I mean, their strategic plan that I think they came out with in 2021, a big theme within that was partnerships and collaboration between research, tech, industry, and I think they've made a lot of good inroads and taken a lot of great steps. So I think continuing along that path, we'll continue to see some good success. I mean, if we look at examples like the Genesis Center and the focus at the university between at least the engineering faculty and business faculty, for example, have had around entrepreneurship, I think some of the incredible successes we've seen in our market right now, Verafin being a very telling one, I think are byproducts of that. So I think the university has been doing a lot of great things for a long time. And I think just the path that their strategic plan outlines, and the fact that they've just even elevated their game, I think that much more in terms of the partnerships and collaboration speaks really well to what will come from that. As it relates to the provincial government, I think one of the key things is, there's obviously the access to capital creates a void. And so I think there is an element where the provincial government can step in and help navigate that void, obviously within the balance of fiscal prudency, and Glen rightfully pointed out the fiscal situation of the province, so it has to be in a balanced way. I think as part of that, the government needs to better communicate and kind of engage, so that, because I think a real challenge for a lot of startups in the tech, well, any sector, is just how you navigate the system, how you understand what programs are out there. And so I think being able to help to better communicate that and help companies navigate that is an opportunity that we can think about. The other thing is, I think just overall kind of speed of responsiveness and such. I think that's something that you sometimes hear about is that could be enhanced, and so I think that's also an opportunity. But certainly the experience that, for example, that we've had in discussions with government, once you kind of get to the right person to talk to, whether it's your development officer within IET, et cetera, I think you can really, the doors can open. It's just getting to that first right discussion is sometimes not as seamless as you might think it otherwise would be. And then I think, things like different types of incentives to encourage investment in the province and investment in the sector, those just more policy related things, I think will be important to consider as well.
Thank you. Emad, a question you mentioned about green hydrogen. So often the greatest breakthroughs in industry occur when disciplines overlap. That is, when you move from one area to another. A classic case, I don't know if you know about this, was with this Carl Kenny. When he first started out, he was he recognized that ships were using paper charts in order to navigate around the world, and he started to do a lot of work in automation, which led him to a lot of work in data compression. So it was a crossover between the use of software and something that was historically done by hand. There are many other industries within the province that, quite frankly, could use a helping hand when it comes to being pulled kicking and screaming into the 20th century, or maybe even the 21st. And I highlight in particular an example which is in the mining sector. So the mining sector in this province is absolutely exploding. I'm on the board of one of the exploration companies, and that's not a recommendation to buy that company, by the way. It's just something that I'm doing as a hobby. But I've recognized that they're still using methodologies that date back to the 1940s and 50s. Classic cases, going and exploring a particular area by foot and snow during the winter. So they've got to do an 80-kilometer trek in order to get an indication of what's underneath the soil. There's work being done on drones using this sort of thing, but that just highlights the opportunity that's out there. How much is the tech sector in a silo and not really spreading within the province to see what opportunities are, whether it's green hydrogen, whether it's wind turbine technology in general, small electric hydro generating plants, etc. And how is it that the tech sector could possibly expand? Any thoughts on that?
Oh, you're hitting sort of one of my loftier areas of thought and being a pain in the butt when I'm in a tavern somewhere discussing it, which is innovation. And I honestly think that if you just look at the province in general, if you look at all of our industries, we have so many advantages, right? We have exceptional built-in, naturally great customer service, as an example. We do have good talent in so many areas. We have fairly loyal workforce, good values, if I can use that word in general. One of our challenges across the board is innovation. Not that we don't have stellar innovation going on, as you said, within silos, but if you expand the view to governments and other industries, it's weak. We have a risk-averse culture in some ways, and I think that comes from from a situation of hundreds of years of of struggle, I guess, and limited opportunities. So what you have is silos of people willing to take risks, but it's not sort of cross-pollinated across the board. And if you look at jurisdictions around the world that are successful, there's more of a sort of a consensus and a shared sort of, we're in this together, we're going to tear down barriers and so on. So even in my dealings with governments at various levels in the province, there tends to be sort of a keep what you got mindset. And today I think, and I really believe this to my core, that the greatest risk you can have or make as an organization is not taking a risk. I mean, that is, you're guaranteed to fail if you don't, because of the speed of change. You're guaranteed to slowly die or quickly die if you're not sort of constantly looking over the horizon and seeing what the opportunities are. And where does innovation come from? It comes from many places. It comes obviously from a mandate from leadership in those industries. So they have to decide that they want to be part of, part of doing new things because they see the writing on the wall or they see the potential, whichever it is that drives them. But also innovation comes from diversity. And that's a profoundly important point. So I remember listening to Gwen Dyer speak about 20 years ago, and he was talking about the development of LA versus Toronto. And, they both had similar sort of trajectories of people moving in from all over the world. But he said that in Toronto, they would have a natural advantage in innovation. I was like, I didn't know where he was going with it. What his point was that in Toronto, you would see someone from India with someone from Thailand, with someone from Ghana, sort of walking down the street, having lunch together, and you'd see that much less in Los Angeles. And his point was that that's what you need for diversity. You need that for innovation, which is your point, Larry, that that cross-pollination of ideas. So we have a cultural advantage in that way, in that people can work well together here. We have a very we have a very unpretentious culture. What we lack is the people coming in from other parts of the world and that mixing it up. And I just think that naturally, I don't want to bring everything back to immigration, but I do think that bringing in people from other industries, from other areas, and certainly from other countries and other regions and other walks of life is what you need to kind of shake up the hornet's nest and get innovation across the board.
Florian, I think we're coming up on our time point there. Can we ask Lynn and Emad then for a last word each?
We're on overtime, time and a half, but that's fine with me if Lynn's okay.
You got a good union.
Yeah.
So Lynn, a last point?
Yeah, I mean, I think from my perspective, I think there is, my last point would be similar to a comment that Glen made, that in times of, some challenge and et cetera, in terms of what we've certainly lived through over the past two years, I think there is great opportunity. And I think with continued collaboration and integration and working across silos, as you alluded to, Larry, and Emad, you spoke to, I think we can be stronger together. And I think that collaboration, both within Newfoundland and Labrador and across Atlantic Canada as well, there's some great examples of that. The other thing I wanted to mention, and kind of feeding on both comments that Glen and Emad raised, but around the whole broad topic of sustainability, including climate change, and diversity, equity, and inclusion. I think when we're in these periods of some challenge and, perhaps tightening down the hatches in different ways or what have you, we cannot not lose sight of that and take our eye off of the need to continue to focus, and exactly for the reason that Emad raised around just that diversity of thought and background and perspective just is the petri dish for innovation and will help us be that much better. And climate change, I think, does present both risks but also great opportunity for us in terms of how we think about responding to that in the right way. So those would be my kind of closing comments. Thank you for the opportunity to chat today.
And Emad?
Yeah, no, thanks. I just wanted to maybe speak to any of the startups here in the room, and just to say this year we celebrated 30 years as a startup. I guess we're still a startup in some ways, but we're including Vision 33, which we spun out a few years back, 12 years ago now. I mean, we started in absolute dire economic conditions. It was 1992. The fishery had just collapsed. We had I think the first person in my mechanical engineering class to get a job was 6 months after we graduated. So it was actually easier to start then because we weren't giving up big jobs. Like, if we had started a few years earlier, it would have been a big decision to give up some, big jobs. So I just wanted to encourage and thank all of the people out there taking risks. And I do think that, hard times provide great opportunity. You're not missing out on big jobs anyway next year, because they're going to be harder to find. But I'm just so excited about the ecosystem. So I'm bullish. I mean, obviously I'm bullish on this sector. I'm bullish on the Newfoundland economy, because I see the potential for some of these green projects to really make a difference. And I think we have so much going for us. I think what we just need is more people coming from different places, and a mindset that says we're all in it together, and we're all willing to take risks together, and we're all excited for each other's success together. So that would be my points.
Thank you. Finally, before I turn it back to Florian, I've been in this business. I'm the oldest one on the panel, and apparently the only one that owns a tie. So that's why I was asked to chair this thing. So, I've been in this business now for over 35 years, and I have never been as optimistic about this province as I am now. Between the mining sector, the oil sector, the green hydrogen plus other elements in that area, the opportunities here are absolutely extraordinary. I think this is the best jurisdiction on the planet for anybody starting up a business. And my clients are looking through this potential recession to the other side. And we think that the opportunity for wealth creation is quite extraordinary over the next 2 to 3 years in particular. So those of you who are wondering, should you take the leap and attempt to charge into the breach, the answer is yes. That you should. This is a great time to start moving forward with expansion, because I think that the opportunity here over the next few years is really quite amazing. And with that, I'll turn it back to Florian. And
awesome, great, thank you all. Glen, any thoughts you want to share before I clear up this session?
Well, first of all, that was a very grown-up panel conversation. I enjoyed it a lot. I really like the fact that people kept reinforcing things that I said, which is always good for your ego. I guess the one specific thing I would point to is immigration policy at provincial level. And it's been a while since I looked at this, but Manitoba was always cited as the example because they had a very good provincial nominee program led by the employers. And I don't know where Newfoundland is right now, but that would be a good example of best practice to ensure that you can cherry pick the very best people for the right roles. A very activist approach where the provincial government engages with employers. To the bigger question that Larry asked about rooting from somebody else, very few oil producing regions are actually going through a successful transition right now. Newfoundland could well set as Larry said in his closing remarks, set the standard in terms of how to diversify, how to broaden, how to think about a modern, sustainable economy going forward. So I wish you all great success.
I do have one final question, though,
yes.
If I could. Emad, how many times have you been mistaken for Anthony Bourdain? Does it get you into some great restaurants around? And can you take me with me next time with you?
Actually, only twice now. Once it was in New York. I was leaving the CNN building. Actually, I had a meeting there, then a restaurant, and the cab driver thought I was. So you're the second person. But if I can get us in anywhere, I will do it. Although he is dead now, so it has changed things a bit.
So anyway,
maybe
I would be invited as well.
What, sorry?
Maybe I would be invited to the restaurant as well.
Yes, you will.
Thank you very much for this great panel. We wanted to have this panel to get our members ready for 2023, and from the discussion, I mean, a lot of good insight were shared. I think for us at techNL, also it reinforces some of the area that we focus on immigration, talents, also access to capital, but also exploring ways to spread the wave of tech within the province. There are many opportunities. We have studied in oil and gas and doing a lot of work in oil and gas. but exploring other ways in mining and hydrogen as well. And there are tons of opportunities next year to take advantage of all the other markets of local markets, but also international to develop technology. So just want to thank all of you, so Lynn, Emad, Larry, and Glen, for sharing your thoughts and insights. I want to share thanks also Marlene and Regan for organizing this session, very strategic and insightful. And finally, I just want to thank all of you for attending the session today. Very insightful for all of us. We look forward to seeing you in the next session, and we have a social also this week if you want to attend. Thank you very much, and have a good evening.
Thank you.
Thank you.